What's good, superstars? Back with another living out of my brokerage account video. You guys seem to have liked the last one, so I thought I'd keep going with it, doubling down. Also, haven't really reached any milestones in the hedging portfolio or the dividend snowball portfolio. Every couple of weeks I'm going to update on those, but not every single week. But anyways, if you didn't see the last video, I gave you guys my cash flow flow chart, basically what you're looking at right here. We can quickly go through it again, but for this strategy that I am running, this is how it goes. I deposit a portion of my paycheck into two accounts. I have a TFSA and I have a margin account, and they're linked through Wealthsimple. I'm in Canada, I use Wealthsimple, and they allow you to link your TFSA to your margin account to open up more margin based off the collateral in your TFSA account. I've decided to separate my accounts into my growth account, which is margin. This is where I will never sell anything, just keep buying assets, holding them forever, never selling them. High yield account, this is where I'm going to be buying assets that yield over 10% or more distributions. Those distributions I reinvest into the same account and hoping to snowball that that one way. And also right now my split is 60-40, so 60% is going into growth, 40% is going into high yield. That percentage will change over time. As I get older here, I'll have a high yield portion just to try and get a little bit more income as needed. But right now I'm trying to maximize the size of the account, the amount of margin able to be withdrawn. This way I can try to slowly cover my expenses, cover anything that I would be spending in that month. So margin account hopefully grows, opening up margin. If that happens and it's more than my expenses, I'll start to reinvest the margin, trying to maintain 50% plus equity. Down the line, we may pay down the margin and run it solely on equity, but I mean, why do it if I don't have to at that point? We're going to see where we are. Other deposits ever come across money, if it's gifted, or if there's any other money that comes up from, let's say, YouTube or other side hustles, that money will just go directly into margin. We're trying to grow this account right now. That's what we're trying to do. After that, we will open up margin as this grows. The first thing we'll do before we reinvest will be pay off bills. And right now, because we're in the growth phase, I'm paying probably closer to 70% of what gets deposited. So if I deposit $1,000, 600 goes to margin, 400 goes to TFSA. But in total, I've deposited $1,000. That means I'll probably pay bills up to $700. And I'll have like a $300 float. If you invest and you pay bills equal to each other, your margin's going to catch up to you and start to take over your equity. So it definitely has to be something that you maintain, you monitor, and it's something I've been monitoring all the time. In this account, I've only been investing when I feel uncomfortable with where my margin is at, adding and taking away, and then just trying to build it that way. We might have to go back, like depending on what happens in the market. If the market tanks, I might have to take a couple bills off the table, stop investing as much, stop doing as much of this, because that's just how it works. But we'll see how it goes, and I'll be explaining it to you guys as we go here. I'm getting a little more comfortable sharing this stuff online, so that's what we'll do. I'm not a financial advisor. This content is meant for entertainment purposes only. I do not know what I am doing. I am likely making this video in my car. That is 100% correct. This is all case studies. Watch my channel. Everything I do here is me testing things out, seeing how things go. This is my most intriguing case study for myself. I really hope that this works out and that I can live off my brokerage, but it's yet to be seen. So take it for what it is. I'm just explaining that to you guys. So what I'm going to do today, I'm going to show you guys my holdings. And I'm not going to sugarcoat it. You guys know how much is invested, so I'm going to show you my breakdown, show you what's in what, which funds I'm kind of focusing on right now. Again, not financial advice. This is just my thought process. This is what I'm doing. Do not do it because it's not proven. This is not a proven method. I'm just doing it to see if it will work, just like everything else on this channel. So this is the portfolio breakdown. You guys have seen this percentage chart before. I've gone over that in a previous video, but now you're seeing the main, basically, hub. Up here, I got some things that I blacked out. That's about it. But a little bit more personal information. But yeah, so I've got growth and I've got high yield, 60-40, like I discussed. My actual, because when I first started this, I had it reversed. I had 60% going high yield, 40% going to growth. But I said, in this time of my life, I want to make sure that this is growing more than it is yielding, because I'm not living off of it just yet. So, and I'm not living off the distributions. I'm kind of living off the margin and the equity. So that's kind of where it's more important for me until I build up the equity, and then and then we'll see what happens. But so I'm trying to flip these numbers, and they're slowly coming down because this used to be 60, this used to be 40. Now you can see getting closer to 50-50. Eventually the growth will overtake. It's just natural. And then I have those further broken down in what I want. So single growth stocks, I want to be 33% of that 60. Growth indexes like the SPY, other ones that are off that like the VGT, other growth index funds, and then commodities I have at 16.6%. So that's gold and crypto, and those are like physical gold. Wealthsimple allows you to buy that in your accounts, so that's one of my items. I'll be showing you guys that. High yield, I got the same three breakdown: single, index, and crypto or commodities. 25% is single stocks because that's been a little bit of struggle for the high yielders. They've been not doing too well, but they do pay a lot more. And then the high yield indexes, I have that at a higher percentage because there are some safer funds, especially Canadian funds. You'll see that in a second. And crypto commodities, 12.5%. So that makes up the 100%. And then when we look at for the whole portfolio overall, this whole total will add up to 100 at the bottom. 20% of the portfolio is in single growth stocks, 30% in index growth. This is what we want. This is the targets. And 10% in commodities and crypto. Then I got single index and commodities, cryptos, 10, 25, and 5. That makes up the 40%. And as you'll see here, these are the current breakdowns. So I do need to add to all three of the growth amounts and take a little bit away from all of the high yielding, which makes sense because we are off weight. But eventually we'll get there. So I'll continue over here. You'll see I track the cash that I have in my margin in my TFSA account because I use that when I get to my that's what pulls up on my cash over here. It's pulling from that sheet. So I only have to update this sheet really, and then everything else updates itself. Margin used, you can see I'm using around $8,800 in margin right now. That also updates on that other sheet. Margin requirement, this is automatic based off of these margin maintenances that I put in, maintenance required. So that pulls from the sheet below. And then the margin available to withdraw, I update this whenever I come into the sheet. So right now I have around 3,600 available to withdraw. I'm not going to go deep into that amount, obviously, because then it will go and it will drain my equity. Right now, my equity is at 54%, which is not bad, considering I want to be above 50%, so that's good. That means that my buffer's around 48.3, and the portfolio overall is down $476, but that's okay because we had a rough November, and I'm very happy with where we're at right now. And hopefully we have an increase in distributions this month, and we continue to see increase in distributions over time. Not that that's a priority. Priority is growing the portfolio, so we're going to check that out as well as we go on. But again, portfolio total right now 19,000, and we've been adding to it, so of course it's going to be moving up. Equity 10,000, and the buffer is 3,400. So okay, let us continue down. I'll show you the holdings, I'll show you the percentages, I'll show you my book values, I'll show you everything. I'm showing you guys everything today. My growth stocks, maybe another growth stock I'll add on to this list eventually will be Broadcom AVGO, but I don't want to be too heavily based into tech or to one sector. I do have a lot of tech stocks in here, but let me make my explanation here. So Apple, Amazon, they don't really move with the tech market. They move more with the value, I feel like, in my opinion. I also tried to pick things that I feel like are like forever type of deals, because I'm going to be holding these forever, right? So Apple's been a machine in the market. More than 50% of people I know have an iPhone. Apple has to be there. Amazon is taking over the world. AWS, you got the shopping, you got the delivery. Amazon has to be there. Berkshire, a little bit more defensive position. If you notice the market going down, a lot of times you'll see Berkshire holding up just fine. Costco, one of my only, I guess, consumer staples. People love Costco. You go to Costco, it's rammed every single time. Costco's got to be in the portfolio. It's actually been getting hit quite a while, so my percentage right now is pretty high. I want these to be pretty equally based if I can ever get there, but it depends on what's happening in the marketplace. So Costco's been beat up, so I have been investing a lot into the Costco. It's not too high of a percentage or whatever, but $878 of the portfolio. I have a ton of positions, guys, and it's just going to keep growing because I don't sell. I'm not going to sell unless something crazy happens where I have to sell, or one of these companies is in big trouble and we don't want to lose our equity again, right? But for now, we're going to keep the mantra, never selling anything, okay? Google, you're watching this on YouTube. Microsoft, you're on a computer, it's probably a PC. If not, you're on a Mac. That's why I got Apple. And NVIDIA, the AI revolution is real. Right now, I'm down a little bit on position, but that's okay. We're not too deep into it, only $500. So That's it is what it is. It is what it is. So I track the percentage of my portfolio. I track my target. I track my book value in Canadian and US. The yellow columns is all I have to update. The green automatically updates current price in USD. Some of them are pink because they do not update with the Google Finance whatever, so I have to update those manually. And then these green are positive, red is negative. Current value in US dollars. Just because I have both funds, I'm just tracking everything in USD. And the return in percentage. Margin maintenance, this is the current margin maintenance of the funds. These might not be 100% accurate because I do have to manually input them. Sometimes when there's splits or when funds go under a certain amount, these change. And it all depends on your broker, really. So basically, this percent times the book value is what I think it's times the book value is what I have for my requirement. Yeah, oh no, times the current value. So that'll be my margin requirement. I have to keep it at a percentage of the current value. Okay, then the equities, I have a bunch of different equities. I'm not going to go through every single one, but like TQQQ and UPRO, these are triple leverage. I like to buy these when the markets are at basically oversold because they're this is basically my new hedge. I've not really been doing the insurance puts. Instead, when the market gets really oversold, I've been buying TQQQ and UPRO, which is triple leverage in the NASDAQ and triple leverage of the SPY, in hopes that when the market does rebound, only has to rebound 1/3 of the way to make up whatever. But again, that would be if I invested exactly the amount that I have. So it's just a little bit of a hedge. And I'm trying to think of other hedge plays. If you have any hedge plays, let me know in the comments. I'd love to hear them. I got some Canadian funds. The Canadian funds are also labeled in like burgundy, the red, so FCIV, VFV, VXM, VXM.B. These are hedged and unhedged, but Canadian funds, but they move differently, so I bought both. Not a lot, I only have $300 combined, but I have them on the radar, right? Gold, physical gold. This is one that doesn't track with Google Finance, but I have been buying some physical gold. There are $450 there. I have the stock GLD, the fund GLD, SLV for silver, PPLT for platinum. I don't have copper and palladium yet, but eventually. And there's also funds that carry all precious metals, so maybe we'll do that. And IBIT for Bitcoin. I do have a little bit of that. Nothing crazy. You can see that position is down around 50%, but it's been down worse. Overall, the growth portfolio is up 6%. We started this in September, I believe. So not too shabby, not too shabby for that growth portfolio. We predicted 7% for the year for growth if we go back to here. And I think for 4 months being at 6% on the growth side, we're living up to the hype of our prediction. And now we get into the income. This is a little bit of a different story. November was not nice to the income stocks. Also, how we started out, maybe not the smartest. We do have a lot in individual stock covered calls, and what we're noticing is that those do not hold up the best in the downturn. There are some that do hold up, and you can see we are green on a bunch of these indexes. The indexes have been doing decently well. The thing is, you'll notice here the distributions. Now, these are not the actual distributions advertised by the company. These are distributions that I received last month, the percentage over 12 months. So some of them might not be too accurate. Like QQCL shows 3.53% because I bought that in the middle of the month, so I don't have a full distribution. Over time, they'll adapt and they'll be a little bit better. But for now, that is the distribution that is current. I also have them where green is the higher ones, then you get yellow, then orange, then red will be like the lower distributions, anything under, I think, 15%. And then from 15 to maybe 40% or 50% is yellow, and then anything above 50% is green. And I have another one in there, sorry, the orange is probably 15 to 20. Yeah, 15 to 20. Anyway, so we continue. A lot of these funds are becoming some of the ones that I'm starting to focus on. They're a little bit lower paying, but a little bit more consistent. They stay in green. We've got bank. Again, the burgundy are Canadian. A lot of Canadian funds are doing half decent when it comes to the higher yields. So something I've been paying attention to. Lately, I've been putting some money into QQCL and USCL, which is the S&P and the NASDAQ. There's a little bit of leverage on it. That's the L there. And then I also like HHIS and Biggie, which are a little higher paying, but they don't perform as well. You can see here, they're still in the red for me, but not too crazy, and they pay around 20-30%. And then you still got some of the other ones like the YMAX and the WPay from Roundhill. Alti's in there. I had a little bit of Alti for a little bit. We're down on those, but they do pay higher distributions. And then we have our crypto / gold If you didn't know, there are a bunch of plays in that for high yielders, and I do have a bunch of them as well. So you got from anything from your MSTR spinoffs to your Bitcoin spinoffs to your gold spinoffs. I'm really liking gold IGLD, not the best return. I think it should be higher than that. But anyway, this is another one that I have to update automatically. But yeah, I'm going through it. You can have a look at what I'm doing here. You can pause it. You can see which ones I have. Yeah, the ones I went over, the QQCL, the USCL, those ones I've been putting money into. MST's been beat up, so I've been putting very little. Like it's a small percentage of what I'm investing right now. It's at 5%, so of my target. So that's what I've been trying to do. And that's it. So that's how I've been blending it. That's what I've been doing there. If I show you guys the actual quickly, you guys can see the month update. So we are up, but we have invested $1,000 this month. We've also withdrawn $592. So we've paid off some expenses, as you saw there. This is the expense float. So 59% of the money that I invested, I have pulled out this month. So you can see that done there. So 59% is 592 over 1,000, right? So I said I'd like to be around 70 to 100%. When I'm growing it, probably 70%. So I do have a little bit of room to pay some more bills off. That's how I'm tracking it. Let me know if you guys would track it a different way. Right now, to date, this month, we've been paid $142 in dividends. This is in Canadian. So far, 16% return if you were to average that over the year. But it will grow, and I think this will be a higher month than last month. It might be our highest distribution month ever because we've been adding to lower paying funds, but we're still getting more distributions, which adds to our monthly payout, as long as these other funds don't cut their dividends and distributions. It's a fine balance. We'll see what happens. You can see here projections over time. We're projected to go under 50%, but not crazy. Really only 49%, and that is if I invest 1,000 every month and I withdraw 700. I'm going to be paying attention to this equity here. If the equity gets up there, I might be doubling. I want to pay 2,000 this month. I want to be doing 500 a week. So withdrawing probably 1,400 for expenses, but we'll see how it goes. Again, I'm going to try it out. If it does affect the equity, next month will have to be less, and we'll just play it like that. But maybe the market will recover. We're not sure, but for now, that's how it is. I hope you guys are enjoying this. Again, here's the cash flow. This is what I'm doing. Hopefully it's all starting to make sense to you guys. You understand my strategy. This is my strategy. Like I said, it's unproven. Do not copy it. Make sure you do whatever you're doing with your finances, something that you've studied, you've done your due diligence on, your research, and I'd love to hear about your strategies. Doesn't mean that I'm going to copy you, but I would love to hear strategies because that's what this is all about. Case studies. Maybe we'll do a case study on something that you're doing. I heard somebody today said that they have the opposite, where their TFSA is their growth and their margin is their high yield. That's great for them. That works for them. They want to grow their TFSA so that then in the end they can just convert it into income and have a big dollar amount that they can be putting into the income funds. For me, I never want to sell my margin side. If I were to do something like that, I think I would just put everything into growth, and then at the end convert just the TFSA side into thing. And that might be something that I do if it's not working out the way I want it to. Maybe I do have to grow the account exponentially faster, so I have to convert and just have my TFSA as also growth until we get to the point where we have enough of a nest egg that we can convert into income funds. We won't lose any of the NAV on those funds at that point until down the line. But it is what it is, guys. I hope you like this. Please smash the thumbs up button. Let me know that you liked it. Subscribe to the channel. If you want to follow me on Blossom, my link is in the description. If you don't have a Wealthsimple account, you're from Canada, you want to open one up, you can use my referral code below. I think there's some benefits. I might have read in the description. If not, I'm sorry. But anyways, it's an affiliate link. I have a Snowball Analytics account as well with an affiliate link there where if you guys sign up, I get a free month of Snowball Analytics. But maybe one day we'll go through my Snowball Analytics. It gives you a lot of more detail into how I'm performing against the market and all these other good stuff. But guys, I've been having a ball doing this. I'm enjoying doing this in the car while I'm waiting for my daughter to get out of her program. And hopefully you guys have been enjoying with me. If you do, please, please, please hit the subscribe button so I know that you've been enjoying. And I continue to put out the content for your faces. If there's anything else you guys want to see, also let me know in the comments. And we'll see you in the next one. I love you. Bye.